Hey everybody, this is David Skarica. So this is kind of be a special earnings stock chart of the day. I didn't have one on Tuesday. Decided to kind of do an extended version Wednesday. Remember, the whole point of this free part of the service too is it's about between 4 to 5 days a week. So sometimes we may not have one during the week because I usually like to do one on the weekend. But this one I'll go a little extended because all these tech companies reported virtually all at once. So let's get right into it here. So Microsoft beat earnings because Microsoft's been quite beat up, so it's kind of just bouncing. So yeah, you can see here it was up, I think, to over 343. So it's breaking some or right at some short-term resistance here, but it's still pretty well off the highs. It's of the summer, etc. So essentially, since May, June, we're kind of in this trading range in Microsoft, et cetera, et cetera. So Microsoft beat here. We have to look at this because I'm doing this overnight, and we have to look at so the after hours. You can see Microsoft was up $11. Google missed. Well, they beat, but they said the cloud, because remember, a lot of the growth in all these companies coming from cloud for sure. I'm not a huge fan of cloud. Maybe I'm old, showing my age, but I still prefer the days when I had my little I had like my storage USBs or the whatnot. But everything goes to cloud now. I guess it is convenient. But Google, basically the cloud part of the business, and that is slowing. And that's actually Microsoft, Amazon, Google. That's where they're all growing now, really. They're not really growing their underlying businesses anymore. They're all growing this cloud storage business, right? You see Amazon actually was down to after being up to today. And it again, the one reason Amazon was down was they had actually pretty good revenue growth, but again, their cloud business does not grow as fast. So Amazon actually looks like the worst out of all of them. You can see it's kind of just, come off its highs in August, September, in here. And I just think Amazon has a lot of headwinds. Like, it's probably the one I would be the most bearish on out of all these, because I was a huge, living on an island, I was a huge Amazon nut. I import, I have to import stuff all the time. Well, Amazon stopped taking my Bohemian credit and debit cards in the last year or so. So I stopped using it. And then I found that really Walmart's really up their game on their website. And then anything, like, a lot of times what I'll do is I'll use Amazon for the search, and then I'll look on Walmart.com or on eBay. So most of the stuff I'm buying now is actually off eBay, and I get it sent to, the way it works here is I get it sent to a forwarding address in Florida, and then they fly it in over here. So I've really have not missed Amazon at all. I guess there's always the odd thing on Amazon Prime I'll want to watch. There was a recent documentary I wanted to watch on there. Oh, I'm a big football fan. It was it's called Life After Football. It's about these guys and all the injuries and things they deal with after football. And obviously I couldn't get it because I can't get my debit card. I've even tried to do like little $2 transactions, buy a little trinket, and it just won't work, or whatever. Buy Kindle books. I'm gonna have to do something about that, because I do like to, download books on Kindle off Amazon. And obviously I can log into my Kindle account and get all the old books I purchased, but it is frustrating. But it's another reason for me personally. Like, sometimes you invest on your own personal experiences in terms of, if you like a product. That's part of the reason, I've been long this Fubo stock for a bit and done okay on it, because I get the Fubo streaming service and I think it's a quality service. So, I decided, hey, the stock is cheap as well, so why not? That Peter Lynch used to talk about how, like, this is back when malls and stores were more popular, that if ground traffic, if you like to store, like, one reason, maybe very simply, you could have been long Apple for decades now, is that when you walked into one of those Apple stores, they're like packed with people all the time. Like, I remember I used to go to that one that's kind of that got that cubed glass building in New York. And I remember and then you go down some stairs or an elevator to it's kind of like below ground, the actual store, but it's always so packed. I think it's so and that's always kind of a sign, right? Or if you went into like a Bed Bath and Beyond, for years, they were basically empty. And actually, when Bed Bath & Beyond was doing well, they would always be packed and full of people. This is obviously like decades ago, right? So you know, so there you go. So anyhow, there's Amazon, there's Microsoft. We'll go look at the Microsoft. We'll go look at the Google. Google's the one that's down the most after hours. Google is down like $8. You see, Google was one. It was at its top, so it's back here. It's basically giving away all its gains since late September. We'll go look at it here. And again, the issue with all these stocks is that they're just stretched. Like they're not crazy on the PDE side, but they do a lot of financial engineering. They do a lot of buybacks, et cetera, et cetera. So you got these things trading at 25, 30 times earnings. The dividends are like okay, but nothing great. And it's just like, they have these massive market caps. See Google 1.74 million, Microsoft or trillion, not billion. Microsoft 2.5 trillion. Remember, just a few years ago, Apple became the only trillion-dollar company. Now we got a whole slew of them. And of course, Amazon, 1.33 trillion. So it's just like absolutely, crazy what they're trading. You can see Amazon too, like, hey, they made more money this quarter, but because they've had difficulties, their margins aren't as good. You can see that the PDE really jumped up in Amazon. So you could see that, these stocks are really starting to are just all stretched. And like if we go look at the long-term charts of these damn things, you talk about parabolic curves and the whatnot. It's just like, let's just even look at 10 years. You kind of like wonder where is the real upside. You can see after 2020, you had the massive bubble and everything when they printed all those trillions after COVID. And like, are these just failing kind of rallies? Like there would be a longer bear market rally. Is there one more run in them, et cetera, et cetera? I don't know. I just know that you just look at these charts. It just looks to me with that combined with these massive things, see, Microsoft did make it quite a new higher high. I just wonder if we're kind of making this huge top going back to 21, 22 and all of these things. We'll look at Amazon. Amazon's got the worst chart of all of them. Yeah, you can see Amazon probably be the one that's the best short here. Because like I said, all that competition, et cetera. Oh, and also too, like recently I used a Fire Stick and I don't even really use it anymore because I had issue with my Amazon account. I was trying to log into account. I had purchased some movies or whatever on Amazon as well. And they made it so difficult, all those Capace numbers and this and that. And I was just like, this thing is short based on how difficult they've made it to use their damn service now. One reason I'm a Google guy is that when you lose a password or have to change a password, Google, I think they have enough security, but they don't overdo it. I think Amazon and Apple totally overdo it. But anyhow, you can see here, and again, as these cloud businesses kind of slow, these companies really don't have much in the way of growth going forward here. And you can see they all did the same thing too. That during that bubble into 2020, 2021, when they printed all that money, when we had zero rates, which we're not going back to, what these companies kind of did. So I guess that's about it for today's stock chart of the day, or stock charts of the day, a little more extended, kind of looked at I'm not going to delve into their earnings. The reason being is, these earning reactions, who knows, it can be one day things, et cetera, et cetera. I just think that these stocks are all, again, overvalued. They're all like if we look at Amazon, let's quickly look at their financials. I'll give you an example here. Another thing too, so you can see they're really slowing down. Like last year they did 514 billion. So Amazon's not that expensive a stock, and that's just over 2 times revenues now. But now, like, look at this company. Look at, like, for example, in 2019 to 2020, this company was growing at a near 35 to 40% clip. Well, now it's at 5%. So the growth phase is over in Amazon as well. So, like I said, with all this competition of buying stuff online, who knows where they're going to really go. So, anyhow, that's our stock chart of the day today. All the tech companies with earnings. Amazon down a little bit, Google down quite a bit, Microsoft up a little bit. So that's where we stand. Of course, the big boy is Apple, and they report shortly. Apple reports November the 2nd. So that's still sometime. That's next week. So we'll see how that goes. So everybody have a good one. I hope you enjoy this. I'm gonna have actually something on crypto, which I know I have people that are interested in crypto, obviously, because we've seen a big move in Bitcoin. It may not be for the reasons that people think this move happened. So anyhow, we'll talk about that probably on our Thursday stock chart of the day.